Live started. Very good morning, guys. టిఫిన్ చేయలేదు నాన్న మరి so okay guys, so when it come to in previous class we discussed the topic of cost of debt calculation, right? When it come to the cost of debt is not a right word. Why? Because sometimes they will use cost of debt name. The word cost of debt represent KD, KT. What's the KD? Cost of debenture. What about the KT? Cost of term loan. Combinedly known as cost of debt. Combinedly known as cost of debt. But when it comes to individual point of view, KD represent cost of debenture, KT represent cost of term loan or bank loan. Now when it comes to KD point of view, you have to learn two definitions: redeemable debenture definition, irredeemable debenture definition. What about the irredeemable debenture, ma? Debenture holder will receive only interest for perpetual life. What about the redeemable debenture, ma? Debenture holder will receive interest for n number of years. At the end of the nth year, he will also receive capital. Guys, clear? Now both the point of view KD calculation is different. The reason, in irredeemable point of view, only revenue expenditure is there, only interest for lifelong. But when come to the redeemable point of view, interest is there, capital is there, revenue expenditure plus capital expenditure. That's why calculation parts are different. So I hope you know the concept of pre-tax and post-tax. What is the pre-tax, ma? If company not taking tax advantage, that is called pre-tax. What about the post-tax, ma? If company taken a tax advantage, that is called post-tax. What you want? Pre-tax or post-tax? Post-tax. Company want to consider benefits. Guys, clear? Now when it come to redeemable debenture point of view, how to calculate the KD, ma? They will give interest rate in the question paper. We will consider and multiply with 1 minus tax, that expresses tax advantage, divided with net proceeds or market price. What is the meaning for net proceeds? What are the meaning for net proceeds? For a debenture, how much I sold to the public. Guys, clear? Now sometimes I sold at book value, that is nothing but par or face value. Sometime I will sell at discount, less than the book value. Sometime I will sell at premium, more than the book value. Are you guys clear? Apart from that, that is the name called issue price. Issue price. After the issue price, sometimes we will pay underwriting commission, that is called flotation cost. Now by considering of net amount what you received for sale of one debenture, that is called what, ma? Net proceeds. I explained examples also, I think. Clear, na? What about the market price, ma? On the date, in share market or open market, what are the value they are fluctuated? Market price will be increased or decreasing, it will be fluctuating. The value is known as market price. There is a no calculation part for market price. If they give, please consider. If they not give, consider net proceeds. Next, when it come to redeemable debenture, ma? How to calculate redeemable debenture, ma? First, revenue expenditure consideration, interest 1 minus tax, plus capital expenditure consideration. What is the capital expenditure calculation? Repayment value minus net proceeds divided by n number of years. I explained logic also why we are considering that. Next, divided with investment, na? The investment is nothing but per security, per debenture point of either net proceed or market price. But when come to the redeemable debenture, two values is there. Repayment value is there, net proceeds is there. For understanding purpose, we did a average. Repayment value plus net proceeds are market price divided by 2. That is called average. Now you will get a proper KD. Pre-tax or post-tax? Post-tax. That's an important task. Are you clear now? So next, ma. Concept number 2, cost of preference share capital. Denoted with what, ma? Denoted with what? KP. So cost of preference share capital calculation. Nothing is changed, ma. Here also preference shares are two types, ma. Preference shares are two types. Irredeemable preference share capital, redeemable preference share capital. Now I hope you know the meaning of irredeemable and redeemable. What is a redeemable and what is irredeemable, ma? What? Here preference shareholder will came, not debenture holder. Preference shareholder will receive only preference dividend for perpetual life. Debenture holder expectation interest, preference shareholder expectation preference dividend. So if they give just a vote dividend, it represents equity dividend. For a preference dividend, you have to properly mention it is a preference dividend. If the vote just a dividend is given, that is called what? Equity dividend. If it is a preference dividend, means they need to express PD, preference dividend. Clear now? Okay, then fine. What about the redeemable preference share capital, ma? Preference shareholder will receive preference dividend for how many days? N number of years. N number of years they will give in the question paper. 4 years, 5 years, 10 years, 12 years. If they not give, irredeemable. If N is not there, what kind of preference share it is? Irredeemable preference share. Now another point is there, na? He also receive preference share capital at what year? Nth year. Now the point, at the time of agreement, they are agreed for 10 years. For every year they will receive preference dividend for year 1, year 2, year 3 up to 10 years. At the end of the 10th year they will receive capital also. Are you okay? But when come to the irredeemable preference share capital, there is a no capital repayment. The only they will receive preference dividend with help of going concern principle. Clear na? Now see, ma. When it come to irredeemable point of view, how you calculated KD, ma? How you calculated KD? Interest 1 minus tax divided by net proceeds or market price. But preference share capital don't have a tax advantage, ma. Preference share capital don't have a tax advantage. Guys, clear? There is a no tax advantage for preference share capital. That's why preference dividend divided by net proceeds or market price. Preference dividend divided by net proceeds or market price. What about the KD? Interest 1 minus tax. Here I am not consider preference dividend 1 minus tax. What I consider? Just preference dividend. The reason? No tax advantage for preference share capital. Tax advantage only for debt. How many debts you have? Two types of debts you have. Debenture, bank loan. I think last formula I explained bank loan only, na? Yeah. Clear? Now when it come to here, KP equals to preference dividend plus repayment value minus net proceeds or market price divided by N whole divided by repayment value plus net proceeds or market price divided by 2. Just observe the one difference. What is the one difference? Tax advantage. Tax advantage only for debenture, not for preference share capital. Clear? Okay, then fine. Now how to what does it mean for PD? Preference dividend. How to calculate? Percentage on face value. So they will give 12% preference share capital, 8% preference share capital, 14% preference share capital. That 14% is nothing but preference dividend. That 14% apply on what value? Face value. Are you guys clear? Next ma. You know net proceeds means. NP means what ma? Net proceeds are sale proceeds. Net proceeds. That equals to issue price minus flotation cost. Issue price minus flotation cost. What is meant by issue price? You can issue at par, you can issue at discount, you can issue at premium. Are you guys clear? If you issue at par means book value is nothing but net proceed. Is issue price. If you issued at a discount means face value minus discount value is nothing but issue price. If you issued at premium means book value plus premium is nothing but issue price. Out of that you have to remove what? Flotation cost. Flotation cost means commission. Next ma. MP represent market price. There is no calculation they will give. Next, what is needed ma? Oh, here also PD is there. What does it mean for RB ma? Redemption value. How to calculate ma? Face value over face value minus discount over face value plus premium. There is no concept of flotation cost. Why? Because it is a repayment value. So when we will pay commission, if our security is not sold in the market, at that time we will appoint underwriter. For that selling purpose only we will pay. But when it comes to capital repayment, it is a concept of capital repayment. For repayment purpose no one is needed na. I have money, I will give to you, that's it. Clear? Then fine. What about the N ma? Number of years. This also they will give ma. That's it. So this is a basic version of KP calculation. In your material, wait a minute, don't write. In your material, there is a concept name called dividend distribution tax. Dividend distribution tax. Generally, as per debenture holder point of view, interest is a burden to the company. That's why company can remove tax. Company can remove tax. Advantage or not? But when it comes to preference dividend point of view, dividend distribution need to pay by company. Dividend distribution need to pay by company. Advantage or disadvantage? Company need to pay tax ma. Advantage or disadvantage? Disadvantage. The tax relating to that PD. The tax is relating to PD. Company need to pay. Advantage or disadvantage? If advantage, you will remove. If it is disadvantage, you have to add. You have to add. That is the only new thing you have to learn ma. Up to here, okay ma? So what you learned ma? There is a no tax advantage. That's why directly you can take preference dividend rate divided with net proceeds or market price. You will get irredeemable preference share capital KP. When it consideration of a preference dividend plus this capital expenditure calculation divided with the average, you will get a redeemable preference share capital. There is no discussion. But in question, they mentioned dividend distribution tax concept. Dividend distribution tax need to pay company for preference share capital shareholders point of view. Now, if company paying means it is a burden. If it is receiving an advantage point of view, it is a benefit. That's why interest 1 minus tax. It is a burden. What I have to do? Preference dividend into 1 plus dividend distribution tax. 1 plus dividend distribution tax. Guys, clear? Dividend distribution tax is given. Burden to company. Why you are removing tax in KD? Benefit to the company. Now KP equals to preference dividend 1 plus dividend distribution tax divided by net proceeds or market price. KP equals to preference dividend 1 plus dividend distribution tax plus repayment value minus net proceeds or market price divided by N whole divided by average. Guys, clear? So this is very, very important for MCQ. This is very, very important for MCQ. Clear? If there is no dividend distribution tax, there is no concept of tax in preference share capital. If they mention clearly, here tax rates are 2 types. 3 types. Company tax rate, dividend distribution tax rate, personal tax rate. Are you clear? Now the company tax rate affects KD. Dividend distribution tax affects KP. Personal tax affects KR. What is the KR? Returned earnings. Clear? For that point I will write at the end of the all concepts. So tax rates are 3 types. Company tax rate, that is nothing but PGBP. Dividend distribution tax, personal tax, individual tax. So individual tax will impacted on KR. Dividend distribution tax impacted on KP. Business tax rate KD. Guys, clear? Okay, then fine. So why in interest point of view I reduced 1 minus tax? Why here I added 1 minus DT? So when it comes to interest point of view burden, that's why they provided a benefit. Interest is a burden to the company, that's why government provides a benefit. But when it comes to dividend distribution tax is a part of the company point of view, they need to pay. Because of payment, it is a burden. Guys, clear? So burden, that's why I am adding to preference dividend. Clear, sir? Now see, I hope in this formula you know calculation of PD and RV, NP, MP, N, all those things. But the only new thing is came what ma? Dividend distribution tax. Percentage on face value plus surcharge plus education cess. So what is the calculation part for dividend distribution tax ma? Percentage on face value. Next, surcharge, where we apply? Surcharge you have to apply on percentage on face value. Education cess, face value plus surcharge into education cess. Clear? Are you okay now? Then fine. See this problem, problem number 4. PP Limited issued 60,000, 12%. What capital ma? Preference share capital only. 2 types na? Out of 2 types, which type it is? Redeemable preference share capital. What about this 100 ma? Face value, can I name it is called par? Yes or no? Can I name it is called book value? Yes or no ma? Then fine. Each at a premium of, what does it mean for that ma? Their book value 100 rupees only. They are not selling for 100, they are selling for 5 rupees extra. 105 rupees is, can I name it is called the issue price? Issue price. Redeemable after, what about this 10 ma? N number of years. Redeemable after 10 years at a premium of, what is this rupees 10 ma? RV is there na? Repayment value, see here the sentence, here comma stops. Redeemable after 10 years at premium, that's the point I said. Net proceeds sentence, repayment value sentence will be same. Don't confuse. Here there is a no clarity, but what they said, redeemable preference, here is a clue they provided. Issued 60,000, 12% redeemable preference shares at 100 each at a premium of 5. This is the point relating to what? Issued. Now you can observe redeemable after 10 years at a premium of 10. This is called RV calculation. Now 10 okay ma? What about the repayment value 10 rupees? Huh? What about the repayment value 10 rupees? Huh? How much? I said clearly, you can observe. This one only na? Face value 100 rupees, premium 10 rupees. What about the repayment value? 110 rupees. Clear? Huh? Now, at a premium of 10 each ma, and they are paying extra 10 rupees. What about the basic value? Face value only na? Face value plus 10 rupees. Next, the flotation cost of each share is 3. How much is the sale proceeds ma? Sale proceeds 105 rupees, but you will not receive 105. Why? You have to pay 3 rupees commission on each share. How much net you receive? 102. What about the net proceeds? 102. Clear? So what is the calculation for net proceeds ma? Issue price minus flotation cost. What is the issue price calculation? Face value plus premium 100 plus 5, 105 minus flotation cost how much? 3 rupees. How much you receive net? Are you guys clear? Okay, then fine. You are required to calculate cost of preference share capital ignoring if there is a dividend tax, formula will be changed. Ignoring dividend tax, they said clearly. That's why I am ignoring. If they said dividend distribution tax, I need to consider. Hope you guys clear? But as per amendments, I think dividend distribution tax is not there. But questions is already printed in FM material. That's why don't neglect that. Even new issued workbook also, they added a problem. You can observe. I think this is a problem I consider from workbook. See, what about the 12.5%? What about the 12.5%? If tax on dividend is 12.5%, surcharge 2.5%, education cess is 3%, calculate the cost of preference share capital. Guys, clear? Okay, then fine. First, we want to solve this. So, problem number it is 4. Problem number 4. Cost of preference share capital KP calculation. So what kind of preference share capital it is? Redeemable only, na? You can write direct formula. What's the formula? Preference dividend distribution tax is there? Not there. Then repayment value minus net proceeds or market price. Net proceeds. Now procure the information, ma. PD represent preference dividend. How to calculate this one, ma? Percentage on face value, ma. What percentage, ma? 12%. Face value? Sorry. This one, na? 12%. Face value? 100. I said already in intro class, you can calculate per share point of view, you can also calculate total point of view. I think in this question they calculated in total point of view. I am solving in one share point of view only. Now see, ma, 12% on 100 rupees, ma. Per share 100 rupees only, na. Now how much is the preference dividend, ma? 12 rupees. Next, ma, repayment value want, ma. How to calculate the repayment value, ma? Face value plus premium, ma. Now what about the face value, ma? 100. They are repaying redeemable after 10 years at a premium of 10 rupees. Now what about the repayment value, ma? 110. If they give percentage, ma? If they give percentage, 100 rupees into percentage, you will get premium value. 100 plus premium value, you will get a repayment value. Common sense only, na? I think in KD point of view, they provided percentage, I think, 5% premium. Clear, sir? Now, net proceeds, face value, plus premium minus flotation cost. What about the face value, ma? 100 rupees, premium 5 rupees, flotation cost reduction, minus, observe, the flotation cost is at the third sentence. Out of flow, if you miss that, your entire calculation will be wrong. Are you clear now? Now see, minus 3 rupees. Now how much net you received per preference share? 1 or 2? Next, n number of years. Number of years, how much, ma? 10 years, huh? Okay, substitute in the formula, ma. I said already, please calculate slowly, step by step. 12. Repayment value, how much, ma? 110 minus 102 by 10. What about the this 110 minus 102 divided by 10 minus or plus 110 minus 102 8 only 8 divided by 2 plus only plus hey 110 minus 102 8 only 8 divided by 10 how much 0.8. Before what symbol is there? Plus only is there. Plus what about the average? 1 not 12 point. Clear? Now for every value, if you multiply with 60,000 shares, you will get total. 12 into 60,000, 110 into 60,000, 102 into 60,000. Again 110 into 60,000, 102 into 60,000. You will get what values? Total values. Here is there now working notes. 12 into 60, 110 into 60, 102 into 60. Then you will get what? Total values. Guys, clear? Now you can observe what they consider. 12 into, what about the 12 into 60 Please calculate 12 into 60. 60,000. 7 lakh. So instead of 12 rupees, you have to consider 7 lakh 20,000 as a preference dividend. Repayment value 110 110 into 60,000 shares. How much 66 lakhs. This is called what redemption value. Repayment value. So instead of 110, you have to consider 66 lakhs. Now what about the net proceeds 1 or 2 1 or 3 1 or 2 into 60,000 shares. What 61 lakh. Clear? What they did means they first they consider flotation cost issue price minus flotation cost. They did here. Nothing is new. Clear? So just a simple concept is total we can calculate, per share also we can calculate. But the common sense you have to apply what if you consider numerator per share, denominator also you have to consider per share. If you consider numerator total point of view, in denominator also you have to consider total. Any doubt on this Easy only Okay, then fine. Come to this illustration number 5 Read illustration number 5. I will give time for making notes. Just read this one. So one error is there, ma. This is not 1000, this is just 100. Now solve ma. So what's the formula for this? Same as above, na. So what's the formula? Preference dividend 1 plus dividend distribution tax plus repayment value. Market price is there and net proceeds is there, ma. Okay, net proceeds divided by n whole divided by average. Now preference dividend how much, ma? 12% of 100, 12. Now the only task is dividend distribution tax. Dividend distribution tax equals to how much percentage, ma? 12.5% on 100, 12.5 only, na? 12.5 plus surcharge how much, ma? 2.5% on 12.5, yes or no? Tax value మీదే కదా నువ్వు వేయాల్సింది. Now tax value is 12.5. This 12.5 is not a preference dividend rate, ma. This is what? Tax rate. Now 12.5 into 2.5%. How much, ma? 0.3125 plus this education says you have to apply on what value, ma? Sum of these two. Now sum these two. 12.5 plus 0.3125 into 3%. 0.384 4, I think they consider round of 4. Now sum all this, ma. 13 point 13.196%. Can I take it is called 0.13196? What is the difference between 13.196 and 0.13196? So that is the percentage, this is the rate. When it comes to the tax calculation point of view, 1 minus tax represent, we are not consider 1 minus 30%. What we consider? 0.3. We are not consider 1 minus 50% in KD calculation. 1 minus 0.5. Why? Because if you resembles with 1 rupee, you have to consider rate only, not percentage. That's why now what you are resembling here, 1 rupee only, na? That's why you have to consider rate. Guys, clear? Okay, then fine. 12 into 1 plus 0.1319 plus repayment value information is what, ma? Repayment value 20%, redeemable at premium of 20%. 100 plus 20%, 120 only, na? 120. What about the net proceeds, ma? Premium of 10%. Commission also is there, na? 5%. I said one note point at the time of flotation cost calculation. In CA books they will consider an issue price. In CMA books they will consider an face value. Now in this problem they consider an issue price. That point I already said, na? Here is a replication. Are you okay, sir? If you want marks, follow this one only. As per concept, all CMA problems they are applying flotation cost percentage on issue price. CMA face value. But in this problem they are applied on as per CA standard. Guys, clear? Don't confuse, just it's a note point. Okay, what about the issue price? 100 plus premium. What about the premium 10%? 110 into 5%. Premium 10% only, na? Issue price is what, ma? Face value plus premium. 100 plus 10%, how much? 110. Now what about the percentage on flotation? 5%. On which value? 110 value. Hey, don't confuse, ra. Generally, conceptual knowledge, face value. For this problem, if you want marks, if they ask this question in the exam, you have to calculate like this only. Point to be noted. That's why I said you have to put note point for this. Here concept is not replicated. Are you guys clear? You have to learn this one also. But the good thing, important thing is this one only. We have to apply underwriting commission on what value? Issue price only. Now you can observe, if underwriter, in which value they will ask percentage, higher value or lower value? Higher value only they will ask percentage, common sense. What is the higher value? Face value or premium? Premium. Face value plus premium only. That means issue price only. For example, there is a discount. At that time, logic to be understand. Clear? That's why the confusing arising. That's the only reason confusing arising. If it is a discount, underwriter will ask percentage on face value. If it is a premium, they will ask on issue price. Everyone are doing for benefit only, Everyone doing business for what? Benefit only. That's why here they are applying on what value, Issue price. What about the issue price? 110. Clear? Are you got the clarity now? Now 110 into 5%. 5.5. Add 110 plus 5.5. Sorry, it's a flotation cost now, minus 104 point. That's it. 104.5 divided by n, how much 5 years. Whole divided by 120 plus 104.5 divided by 2. Now please tell me the individual calculation. First add that bracket value, 1 plus 0.1319 into 12, how much? 13.5828 plus, tell me the expenditure value, per year expenditure value, 120 minus 104.5 divided by 5, 3.1 divided by average value, 112.25. Now add the numerator, 13.5828 plus 3.1 divided by 112.25 into 100, 14.86. Okay, they consider 86. Up to 86 they consider just. Or you can also take 862. Clear? Any doubt on this? So what is the learning point for this problem? What is the learning point? First dividend distribution tax. That is the learning point. What about the second learning point? Net proceeds calculation. On that net proceeds also flotation cost calculation. Flotation cost you have to apply percentage on issue price for this problem. Are you okay now? Now please present in your notes. I will check now. Book already readily is there, only cover pages are not ready. If cover pages are ready, we will give within 2 or 3 days. Concept book and workbook both are ready. This is not a only one chapter related book, it's a total book. Sir, please, one rectification is there, sir. Just rectify in your class notes in concept. All of you all completed concept notes. కాన్సెప్ట్ నోట్స్ రాసారా? మీ అబ్బాయి రాయలేదు, మీరు నువ్వు రాయలేదా? సరే, ఇది రాసిన తర్వాత అది ప్రాబ్లమ్ సాల్వ్ చేద్దాంలే. ఆర్డర్ మిస్ అయిపోద్ది లేదంటే. దిస్ ఇస్ ఎర్రర్ నానా, రెక్టిఫై ఇట్. Percentage of dividend tax plus percentage of surcharge plus percentage of education cess. You need not to apply on anywhere. Just you need to consider percentage, that is sufficient. Then write down notes ma first. Concept up to concept 2 completed in yesterday. Now please start with the concept 3. కాన్సెప్ట్ రిలేటెడ్ ప్రాబ్లమ్స్ అలా ఉంటే నోట్స్ ప్రాపర్గా ఉంటుంది, నీకు రివిజన్ కూడా యూజ్ అవుతుంది. కంప్లీటెడ్ మా? So based on this, tell me ma, in exams what kind of calculation they will ask? Irredeemable or redeemable ma? Common sense. Guys, completed? So percentage of distribution tax, or go with the full forms. Percentage of distribution tax plus percentage of surcharge plus percentage of education cess. If you just add the percentages, you will get a dividend distribution tax. You need not to multiply with any value. If you apply percentage and value means what you will get outcome? Value only, na? But what you want? Percentage. Hope you guys clear? That's the error. As well, in a question, we removed 1 0. Nothing will happen. If 1 0 is there, every value you will get thousands. If you remove 1 0, every value you will get hundreds. Ultimately, the answer will be same. Clear? Then write down this problem. Problem number 4. Problem number 4 first. Sir, in my notes, I am writing all concepts in one order and problems in another order. But as per your notes, you have to plan like this: concept, problem, concept, problem. Okay? For revision purpose only, I am writing like this. In the end of the syllabus, I need to revise entire syllabus as well as marathon purpose. That's my planning of the notes. But you can go with the concept and problem, concept and problem. These all are basics, ma. It's not a standard. These all are basics. For 7 mark question, this is one of the part. Clear? Completed? These working notes are very important. Why? Because in formula you have to write full forms, but we used shortcuts. For the shortcut meanings, I recorded here clearly. Sir, no sir, I will write formula in full format. Then you need not to write working note like this. Okay. So you have to keep time for this 7 mark problem only 8 minutes. You have to finish this 7 marks problem related to cost of capital within 8 minutes. Okay, so that only possible with help of practice, as well as shortcuts. Clear? Completed, na? So without let, I will write that problem also. Problem number 5. 12% of 100, 1000. You can take 1000 also, no problem. 10 will be add extra. That's it. 1000. How much ma? 120, yeah? Okay. Dividend distribution tax ma? 12.5% plus what is the percentage? 2.5% of 12.5% plus 12.5% plus 2.5% of 12.5% into 3%. That's it. Now tell me the values ma. 12.5% plus 0.3125%, that is, plus 0.3843%. Now sum of all percentages 13.19. Don't use your brain, use your calculator, please. Percentage I want. 13 point. Add this 3 ra. $13.19 1968 percentage or 0.131968. Now repayment value. Repayment at what ma? Premium ma? Repayment at removable premium of 20%. 120 only na? 100 plus 20% of 100. 120. What about the net proceeds ma? 100 1,000 amma, this one? 1,000. 1,200 repayment value. Net proceeds ma? 1,000 plus premium 10%. 10% of 1,000 minus 5%. 5% of 1,100. Now 1,100 minus 5% of 1,100, how much ma? 50. 55. Net proceeds 1045. And n also there na? N how much ma? 5 years. How many years? Now substitute in the formula. 120 or 12 ma? 120 only na? 120, 1 plus 0.13, 1968 plus repayment value ra? 1200 minus 1045 divided by 5 whole divided by 1200 plus 1045 divided by 2. Answer? Tell me the direct answer. 14.862 na? 14.862%. Clear, sir? Any doubt up to KD and KP calculation? Any doubt up to KD and KP calculation? KT? KT also nothing. Interest 1 minus tax. There is no denominator. The reason? It is not a number of security. Just we are mortgaging document in the bank. Clear? Okay, then fine. We are entering into important concept. Close your books, ma. Concept number 4. Cost of equity calculation. Now when it comes to cost of equity calculation, ma, first you have to understand one concept, ma. Calculation of KE is difficult than KP and KD. Are you agree? Are you agree or not for that statement? If you knows that agreement or knows that sentence, then entire concept is easy. This is right sentence or not? That is the question. Calculation of K is difficult than KP and KD. Sir, who said, sir, KP, KD also difficult only, sir? అంతేనా? ఏదో మీరు ఈజీ అని సెంటెన్స్ రాస్తే సరిపోద్దా? రిడీమబుల్ అన్నారు, ఇరిడీమబుల్ అన్నారు, డివిడెండ్ డిస్ట్రిబ్యూషన్ ట్యాక్స్ అన్నారు, ఇంట్రెస్ట్ బెనిఫిట్ అన్నారు, అది కూడా మాకు డిఫికల్టే. ఎస్ ఆర్ నో సార్? బట్ here the concept says that, conceptually says that, comparing to KP and KD, KE is difficult to calculate. The reasons are there. The reason, when it come to observe the balance sheet, debenture have already rate of interest, 12% debenture, 8% debenture, 14% debenture. Preference share capital has a rate, prefix rate, 14%, 12%, 11%, 8%. What about equity share capital? Are you observe anywhere? ఎప్పుడైనా చూసారా? 12% equity share capital, 15% equity share capital. Are you observe? No, na? That's why the sentence is true. Why? Because how to calculate KD? Interest 1 minus tax, na? Already you have a clue. Interest rate given in the question paper. How to calculate KP? Preference dividend. Already given in the clue in the question paper. But where is the clue for KE? There is a no prefix for KE. Are you guys clear? Okay, then fine. Next. What is the expectation of debenture holder? Interest. What is the expectation of preference shareholder? Preference dividend. What is the expectation of equity shareholder? Equity dividend. Can I name it is called company profits? Bonus profit only, na? Dividend is nothing but bonus profit. Yes or no, ma? In income statement I explain. Now tell me, every year you will get same profits, huh? Then how you calculate, ma? Why? Because in numerator you are calculating benefit only, na? Now what is the benefit here? Equity dividend. But equity dividend every year it will be same or different? Different. It will be fluctuating. Are you guys clear? Next, how to calculate KD means divided with net proceeds or market price. Net proceeds or market price. When it come to KE point of view, comparing to KP market price, KD market price, in share market, every equity share will be fluctuated every day. Now denominator also not a proper. Numerator is fluctuating, denominator also fluctuating. That's why KE calculation is difficult than KP and KD. What is the first reason? First thing, there is no clue. That is the first difficulty. What is the second difficulty? Numerator will be fluctuating, denominator also be fluctuating. When it comes to KE point of view, denominator, there is no concept of net proceeds. Are you guys clear? Market price is only absolute thing. If they give net proceeds, even though if they give net proceeds, you have to consider market price only. Why? Because equity shares majorly focusing on market price, not on sale value. Sale value is nothing but what? Net proceeds only, na? Clear? The common sense, they're selling their calculation only based on denominator P naught or MP naught. What is a P naught? Market price, also be known as MP naught. Guys, clear? So two difficulties I figure out. The third difficulty, my company is growing every day, every week or every month, every year rapidly. Now the growth is a benefit only, na? That benefit can be enjoyed by equity shareholder or a debenture holder or a preference shareholder. Growth. Who can enjoy? 5 members is there in the company. Equity shareholder or retainer is also equity shareholder, banker and preference shareholder, debenture holder. Out of these 4 people, who had a right to enjoy company growth? All of them? All of them? No. Only owners. Who's the owners? Equity shareholders. Are you guys clear? Now the growth also every year will be same. Sometimes it will be huge, sometimes it will be less. It also be fluctuating, na? That because of growth concept, KE is difficult than KP and KD. Now tell me, is there any growth concept in KP? They don't have a right. Is there any their growth concept in KD? They don't have a right to enjoy growth. Who had a right, Equity shareholder. Equity shareholder. Hope you guys clear? Because of the 3 reasons, KE calculation is difficult than KP and KD. Now what are the 3 reasons, No base value. Percentage. The base value is nothing but what, percentage. What about the second reason, Fluctuation in earnings or benefits. What about the third reason, What about the third reason? Growth. What about the fourth reason? Fluctuations in what? Market price. You can add this one here also. That's why I said 3 points. In detailing 4 points. Clear, sir? Sir, even though you have a multiple reasons to say K is difficult, but you have to figure out now. For that figure outing purpose, they provided 4 methods. In KP, 2 methods is only there. In KD also 2 methods is there. But when it comes to the KE calculation, 4 methods is there. Earning approach, dividend approach, CAPM, and realized yield approach. See carefully. Sir, why this much of methods not there in KP and KD? Why this much of methods not there in KP and KD, sir? That is only the theory I explained. They're easy thing. They have a base value. There is no fluctuations in numerator. There is no fluctuation in denominator. There is no growth concept. That's why that much of methods is not there. But when it comes to these are the reasons difficult to calculate. That's why they provided 4 approaches. Now, CAPM, earning approach, dividend approach, realized yield approach. Now first I will explain this CAPM. The full form for CAPM, capital asset pricing model. Capital asset pricing model. Now this specifies KE equals to RF plus beta into RM minus RF. This is a formula. This will reflecting in your final level also. For this proof, how that RF plus beta into RM minus RF is came, proof is there. That is called as per max theoretical proof is there, na? Theorems. That kind of proof is there in final. But for inter level, proof is not required. Just formula is sufficient. Now I will give clarity about each and every element. So KE represent you already know. What is the KE? Cost of equity. That is your ultimate agenda to calculate. What about RF means? Now tell me, I have 1 lakh rupees in my bank account. I have 2 options. One is real estate, another one is share market. Which one is risky? Which one is risk free? Share market, real estate. Which one is risky? Which one is risk free? Comparing to real estate, share market is risk free. Yes or no, na? Clear, ma? Why? Because in when it come to land value, we can't expect. But when come to the share market, it followed rules and regulations by SEBI. Yes or no, na? So one body is there, they will give time to time rules and regulations. Based on that only, that entire share market will works. That's why risk free is there. Real estate, there is no rules and regulations for real estate. That's why there is a huge risk. Now tell me, where is the profit? More profit. Not in share market, real estate only we have a more profit. More risk, more profit, less risk, less. Are you guys clear? Now if I choose risk free, which one is the best one? Share market. My return also less only comparing to real estate. Are you guys clear? Okay, then I have another 2 options. Share market, Axis Bank. Share market, Axis Bank. Which one is risk free? Which one is more risk? In share market, there is a huge fluctuations. When it comes to bank, safety is there. Yes or no, na? They will give fixed rate of interest. But when coming to the return point of view, where I will get more return? Share market. More risk, more return. But I am checking only safety. Which one is the safety for a second example? Bank, Axis Bank. Guys, clear? Huh? Now, third example. Axis Bank, SBI. Now tell me which one is a safety? SBI. Why? Because PSU, public sector undertaking. Guys, clear? Fourth example. SBI, Hyderabad Treasury Fund. Hyderabad government treasury funds is there. Are you clear? So in simple terms, ela cheppali meeku. Amaravati, do you know Amaravati? AP capital. So for procurement of fund point of view, Amaravati government issued a securities. Now I have 2 options. Investing 1 lakh rupees in Amaravati securities, investing 1 lakh rupees in SBI. Which one is risky? Which one is riskless? Government is riskless. People will come and go, government will be continue. But when it comes to the company point of, at one point of time company, there is a chance of closing. Guys, clear? Now that is the definition for RF. RF means what, ma? Risk-free return. Risk-free return. The examples are government securities. Examples are what, ma? Government securities. Guys, clear? Now the concept of beta expresses systematic risk. The beta represent systematic risk. They will give value in the question paper. So in detailing also is not required for beta. Beta represent systematic risk. There is a concept name called volatility. There is a concept name called volatility. By based on that values will be there. More than 1, less than 1, equal to 1. If one value is increases, if it is an answer more than 1, based on that how much your company affected. If less than 1, how much your company benefited. That kind of concept said by beta. Beta represent systematic risk, that is sufficient. Now in bracket what is the word I record, ma? RM minus RF. Now RF you already know. What is RF? Risk free rate of return. RM represent return on market portfolio. Return on market portfolio. Now the word portfolio represent I have Adani group of company shares, Reliance company shares, TCS shares, next M&M, Mahindra and Mahindra company shares. Now if I have only M&M, Mahindra and Mahindra company shares, that is called just individual part. But I have how many company shares? The collection of all shares is known as portfolio. Are you guys clear? Now the RM represent not only individual company return, it talks about entire 4 company return, that is called RM. Return on market or return on market portfolio. Guys, clear? Now tell me, ma, what about the RF, ma? Risk free rate of return. What about the beta, ma? Systematic risk. What about the RM, ma? Return on market portfolio or return on market, you can use what are the word you want. Clear? But the only note point you have to understand in inter level, RM minus RF also have a name. Individually you know the full forms. RM minus RF also has the name. Risk premium. RM minus RF is nothing but what, ma? Risk premium. In question paper, if they give the word name called risk premium, you need not to consider RM value individually, RF value individually. You have to consider premium value directly. Point to be noted. RM ఇచ్చాడు నాన్న 15%, నాట్ RM ఇవ్వలేదు, RF ఇచ్చాడు 8%, రిస్క్ ప్రీమియం 10% ఇచ్చాడు. స్టూడెంట్ ఎలా థింక్ చేస్తాడు? రిస్క్ ప్రీమియం RM 8% RF అనేసి 10 - 8 చేసేస్తాడు. బట్ అలా చేయకూడదు. రిస్క్ ప్రీమియం రిప్రజెంట్ డైరెక్ట్ ఫార్ములా ఆఫ్ RM minus RF. దట్స్ వై యూ డోంట్ 10 - 8, please consider 10 directly. Clear? There is the only note point you have to understand in inter level. Problems are very easy in inter. Clear? In final they will ask beta calculation also, but inter there is no beta calculation. Beta they will give. Are you okay now? So basic formula, multiple formulas is there for beta calculation. I think MCQ one problem is there, but that also be a basic version. Covariance of market and security divided by standard deviation of security and market, that formula is there. I will explain later. Now see, write down the full forms here. What is the RF? KEMA, cost of equity. RF represent risk free rate of return. Example, government securities. Return on government securities is nothing but RF. Sometimes they will give an exam word name called treasury bills. Treasury bills. The word treasury represent bank related, government related only. Next, beta represent ma? Systematic risk. RM represent ma? return on market or market return. So here market represent individual company or all companies? All companies. What is the note point you have to learn, ma? RM minus RF is nothing but risk premium. That's about the concept. Clear? So if you solve few problems, you will get a clarity, ma. See this one, ma. Illustration number 9. If the risk-free rate of return and the market rate of return of investment is 14%, 18%. What is mean, ma? What is the 14%? RF? What about that 18%, ma? RM. What do you want? Beta only. Now see, ma. Calculate the cost of equity share capital if beta equals to 1, if beta equals to 2/3, if beta equals to 5/4. Now you know the formula, na? Case 1, case A. Ke equals to RF plus beta into RM minus RF. Now what about the RF, ma? 0.14. Rate I considered 0.14 plus what about the beta, ma? 1. RM, ma? 0.18 minus 0.14. Answer 0.14 plus 1 into 0.04. 0.18 minus 0.14. 0.04 only, no? 0.04. Now answer 0.144. 0.14 plus 0.04. 0.18. Can I enable this can I use the concept of 18%? Multiply with 100, ma. Are you okay? I solved only consideration of rates. If I want percentage, I will multiply with 100. That's it. Now see. Case B. RF not change. RF not change. What changes, ra? Beta only changes. What is the beta, ra? 2/3. Can I name it? It's called risk premium 0.04. Risk premium 0.04. Yes or no, na? Why? Because RM minus RF is nothing but risk premium only. I know the RM value, RF value. The gap is nothing but 4%. 0.04. Answer 2/3 into 0.04. 0.0267 per 7. Now answer 0.14. 0.1667 or 16.67%. Now you can observe, what about beta here? 1. What about beta here? 2/3 means 2/3, 0.66. 0.667. Now beta what happened, ra? Beta what happened? Decreases. If beta decreases, risk also decreases. Systematic risk I said, na? So common sense, ra? If risk decreases, automatically owner expectation also. See, ra? Clear? If more risk, as a owner I will expect more. If less risk, less. Now, third case we will get some more clarity. What about the third case? 0.14 plus 5/4. 5/4 risk premium 0.04. Tell me the direct answer. What, ma? 19%. What about the beta? 5/4 means 1.75. 1 point. Now what happened, beta? Compared to case 1, increases only, na? If beta increases, risk also increases. If risk increases, expectation also increase. Previously it is 18%. Now it is 19%. Now compare with the case 2 versus case 3. What about the case 2 beta? 0.67. What about the case 3 beta? 1.25. More risk only, na? More risk, more expectation. You can observe 16.67%, but here 19%. Any complication, ra? For CAPM, everything they will give in the question paper, ra? Everything they will give in the question paper. Clear? Next. Illustration number 10. Illustration number 10. Read the question properly. From the following information in respect of company, you are required to calculate cost of equity using CAPM approach. Sir, sometimes they will not give CAPM heading, sir. Based on RF information, based on beta information, based on RM information only, you have to decide which approach it is. CAPM. Why? Because that RF, RM, RF, beta not there in remaining 3 approaches. That's why I said first this one. Clear? Now, risk-free rate of return. Can I name it? It's called RF, ra? Expected market price equity shares at year end. Market price, ra? Initial price of investment in equity shares of the company. This also be market price. Now, can I write like this, ra? MP0 and MP1. What is the difference between MP0 and MP1, ra? At the time of investment, the share value is 1000. 1200. 1200. But in future, the share price what happened, ra? Now 0 represent current year, ra, today. 1 represent future. Now expected market price of equity shares at year end, and first year ending, 1200 at beginning, and it means today. That is the meaning of not and 1. MP1 represent expected market price. Are you guys clear? MP0 represent current market price. Current means today. Hope you guys clear? Okay, then fine. Beta risk factor of the company. Directly they given beta value. Expected dividend at the end of the year end is 140. So expected means what? Current period or future period? What is the value it is? Dividend. Can I name it is called D1, ra? Or D0? Why D1? Future. D1 represent future. D0 represent current means today. The difference is very, very important for remaining 3 approaches, ra. Guys, clear? What are the 3 approaches? Earning approach, dividend approach, realized yield approach. What are the formula we have to write here? That is called realized yield approach formula only. Clear? Now just I will give a common sense calculation part. Now, so they are asking CAPM point of view. I know the formula. K equals to RF plus beta into RM minus RF. Yes or no? Now they are asking question KE. Now I want this all information. RF is there, beta is there. What is not there? Written on market. Now I understand one point. In market, I purchased one share. For rupees of 1200. For holding of that share 1 year, I received a dividend of 140. As well, if I sell this share at market today for 1400, I will get another 200 rupees extra. I purchased for 1200. If I sell 1400 extra, how much benefit you receiving? No, 200 plus 140. 340. Guys, clear? Now how much you invested? 1200. How much benefit you received? 340. 340 divided by 1200 RM. So due to investment in the market, how much benefit you received? 340 rupees. I want in percentage. I want in percentage. How much, ma? 28.33%. What is this? Return on market. Guys, common sense only na. 100 రూపాయలు పెట్టి షేర్ కొన్న 1 year హోల్డ్ చేశా. 1 year హోల్డ్ చేసిన దానికి కంపెనీ ప్రాఫిట్ షేర్ ఇచ్చింది. ఎంత ఇచ్చింది? సమ్ 20 రూపీస్ ఇచ్చింది. ఈ ఎగ్జాంపుల్ కదా పక్కన 20 రూపీస్ ఇచ్చింది. నేను ఇయర్ ఎండ్లో కంపెనీ షేర్ని అమ్మేద్దాం అనుకుంటున్నా. 100 కొన్నాను, 120కి ఉంది. ఇప్పుడు నాకు ఆ షేర్ కొనడం వల్ల వచ్చిన బెనిఫిట్ ఎంత? 20 రూపీస్ డివిడెండ్ ప్రాఫిట్ షేర్ వచ్చింది. అమ్మడం వల్ల క్యాపిటల్ అప్రిషియేషన్ 20 రూపాయలు వచ్చింది. 40 చెప్పింది, 140. వేరా డోంట్ కన్ఫ్యూజ్ ద వాల్యూస్. సేల్ వాల్యూ ఎంత చెప్పా? 120 రూపీసే కదా చెప్పింది. 20 రూపీస్ డివిడెండ్ వచ్చింది, క్యాపిటల్ అప్రిషియేషన్ కూడా 20 రూపీస్ వచ్చింది. 100 రూపాయలు పెట్టడం వల్ల నాకు ఎంత బెనిఫిట్ వచ్చింది మార్కెట్లో? 40 రూపీస్. ఎంత పర్సంటేజ్? 40 డివైడెడ్ బై ఇన్వెస్ట్మెంట్. ఎంత ఇన్వెస్ట్మెంట్? 100. 40%. సేమ్ లాజిక్ ఓన్లీ వీ అప్లైడ్ రా. క్లియరా? దిస్ ఈస్ ద కాన్సెప్ట్ నేమ్ కాల్డ్ రియలైజ్డ్ డీల్, 4th మోడల్. Realized yield approach. Realized yield approach. Now if you purchase one security, how many benefits you are receiving? 2 benefits. Profit share, capital appreciation. Now the profit share is nothing but dividend. Guys, clear? Now see ra. P1 minus capital appreciation plus dividend. These are the benefits you received due to investment. Now simple ra. How to get capital appreciation ra? Selling price minus purchase price. Selling price minus purchase price. Can I name it as P1 minus P0? P1 minus P0. This is called what appreciation ra? Capital appreciation benefit. Plus D1 or D0 ra? D1 or D0? Why D1? Future. Why? Because I am calculating today, but the dividend will receive what? Future. Guys, clear? Divided by what is the investment per share? P0 or P1? P0. That is the formula. So problem is over, concept also be over. Clear na? Now tell me the calculation part ra. RM ra. We know direct calculation na. Capital appreciation 200 plus dividend 140. How much I invested ra? 1200 into 100. 0.2833. Now RM also there ra. RF ra. 12% ra. RF 12%. 0.12 plus beta ra 0.7. RM ra 0.2833 minus RF ra 0.12. Answer ra. First calculate the bracket value, then multiply with 0.7, then add with 0.12. Order of calculation also very important here. First you have to consider the bracket value calculation, then multiply with 0.7, then add before value. Answer? Answer? 0.2343 or 23.43%. Why wrong calculation? Means you started from starting. I said already. So first you have to calculate bracket value, then you have to multiply with before bracket value, then you have to sum with 0.12. Any doubts ma? Sure? Then write the notes ma. So when it comes to the exam point of view, CAPM, dividend approach, these two are the very, very important concepts. In every problem, they will touch this one, dividend approach only. After dividend approach, if they not give dividend approach means they will touch CAPM. Clear? But the dividend approach, earning approach, both are same, easy. Speed up, ma. Completed. Huh? Just you came for demo class or you purchase class, no? Admission. Then why your notes? డబుల్ వర్క్ అయిపోతుంది డబుల్ వర్క్ అయిపోద్ది కదా డబుల్ వర్క్ అయిపోద్ది అనేసి అంటున్నా నీకే పర్చేస్ చేసినావు అనుకో ఆ పేజెస్ కౌంటే వదిలేసి నోట్స్ స్టార్ట్ చేసినావు అంటే కొంచెం టైం సేవ్ అవుతుంది అనేసి గైస్ కంప్లీటెడ్ నా కెన్ ఐ వాట్ అబౌట్ టుమారో హాలిడేవా క్రిస్మస్నా హాలిడే ఆర్ నాట్ ఓకే illustration number 9 I will just write shortcuts ma okay that is not important for exam standard just for conceptual clarity purpose only I inserted the problems beta equals to 1 na case A beta equals to 1 K equals to what about the RF 0.14 plus or minus What formula ra? I forgot that ra. Plus only na. Plus 1 RM 0.18 minus RF 0.14. Answer 18%. Case B. Beta equals to 2 third. K equals to 0.14 plus 2 third divided by 0.04. 16.67%. Case C. Beta equals to 5 by 4. 0.14 plus 5 by 4 into 0.04. Answer 19%. Now point you have to understand. If beta is more, beta is less, expectation also, wait, beta is less means less risk, less risk, less expectation, simple terms. Beta is more risk, more expectation. That are the learning points in problem number 9. Clear ma? Next ma. Problem number 10 na. I think RF given in the question paper, right? 12%. Beta also given in the question paper. 0.7. 0.7. I think RM is not there, right? But RF is there. 0.12. Now you have to do working note for RM. RM equals to capital appreciation plus T1 divided by P0. So how to calculate capital appreciation? P1 minus P0 plus D1 divided by P0. So what about the P1? 1400. P0 1200 plus 140 divided by investment. Now the answer 23.88. 28.33%. I want rate only. Now 0.12 plus 0.7 of beta RM 0.2833 minus 0.12. Answer 0.23 431 ORR 23.431%. This is about today class ma. Are you clear? You have any doubts, ask me now. So tomorrow I will ask questions. Please revise up to KE except earning approach, dividend approach. Okay, thank you.